Hello and welcome to MasterChartsTrading.com market recap for Friday, July 24th, 2015. This week, S&P 500 what appears to be failed at all-time highs and is now currently retesting its first support. QQQ, the NASDAQ 100 ETF fared better and is testing its breakout. And we will examine whether money is rotating out of healthcare stocks and whether or not money is possibly rotating back into bonds. The dollar index consolidating after a breakout from last week's breakout. We will also look at gold and gold miners, which are exhibiting a possibly bottoming action. And oil, energy ETFs and stocks and energy producing countries keep sliding. And we also got our short signal on natural gas. Alright, let's look at the S&P 500 daily candlestick chart. So first of all, this is still a bullish chart. The prices are moving from the lower left to the upper right, and 50-day moving average is above the 200-day moving average. We have not had a support break just yet. Major support, I think, is right here in the 2040 area. 2039 here, 2040. So we tested the support twice already. It's possible we're going to get a third test. If we fail here, that would be something to worry about. Medium term at the very least. At the current moment, we're retesting the first support and the breakout. So last week we broke out right here at around 2080 or so, and currently we came back to it. So this is sort of a normal breakout and consolidation, but generally speaking, S&P 500 just kind of in this big trading range for the past few months, more than 6 months here, probably going back even further back. So ideally, there would be a breakout above this 2100, 2130 area. This has not happened, and on 3 occasions we have failed here. So for now, it's not a great looking chart, but it's not a terrible looking chart either. It's just kind of in between, sort of just hanging out there. Again, the divergences remain. Advanced decline line on balanced volume didn't see a new high, in either one of them. So we're still trending down for breadth and volume as well. So neither one of them broke out, and it's still very much a valid concern. However, once again, we have not had a major breakdown, and we're just retesting the first support. If we do break down below this 2040 area, if we close below the support, then we will reevaluate this thing, the bullish stance. At this point, it's not too bad looking. Okay, let me just refresh this. This is maybe older values. Okay, haven't gotten the new value for the new highs, new lows indicator, but most likely it will be here somewhere around -4 or 5. So for now, the percentage of stocks of new highs, new lows is just somewhere in between, around 0 basically. Now, again, so we're just kind of consolidating, and we could break either way. We could break out to the upside, or we could potentially break down. So we'll see which way it goes. Now let's look at QQQ, the NASDAQ 100 ETF. This one did break out. So there was a clear breakout here on last week. And then again, we came up to the all-time highs and then came down pretty hard this week, especially Friday. There was lots of selling taking place, almost 1% loss for QQQ. And again, similar picture, the large stocks within the index, such as Netflix, Amazon, Google, they are all posted nice gains, while the average stock within the index really didn't go that well, didn't really break out. And I'll actually show a next chart of QQQEW, which is an equal weight ETF, which will highlight this fact. So we have a uptrend in security, but the advanced decline line, which basically treats all stocks within the index as equal. So if you have advance is +1, decline is -1, and you can see it's trending downwards. And you just add them all up. It's a cumulative advanced decline line. So it's trending down, and it has not yet confirmed the new highs in the underlying index. I was really hoping that we will get a breakout in volume, on balance volume. We didn't get it, so again, we're still diverging with volume and the advanced decline line as well. So just for comparison purposes, let me show you QQEW. Sorry, QQEW, which is an equal weight ETF, and you can see it's somewhat different than the QQQ. There is really not a breakout to speak of, and it's just kind of flat basically here. So again, the average stock within the technology-driven QQQ has not really caught up to the big names like Google and Amazon and NASDAQ, etc. All right, next let's look at healthcare, XLV healthcare ETF. So this one is a very strong ETF, and it's been a very strong sector for quite a few months. And we just hit an all-time high right there. Just turn on this rollover. We just hit an all-time high just a few days ago, really. And then afterwards consolidated a few days, and then today on Friday we kind of gapped down and then continued selling throughout the day. And already we closed below this red line, which is a 50-day moving average. So quite a bit of selling in the healthcare stocks. Where it will lead, it's hard to say, but the next stock I'll show is Biogen, and that one just highlights the importance of paying attention to earnings really for this type of companies. So on this chart, XLV, the healthcare ETF, the first support is pretty close already. It's at $73 or so from this low and from this low in June. Should this give, it's almost a guarantee we will get a retest of this 200-day moving average at 71. So if this level does not hold, this is another 4% or so, and this would represent about a 10% correction from the high to the low, should it happen. It hasn't happened yet, so it's very much possible that Monday will just simply turn around and continue back up, because there was quite a bit of selling, and very short-term indicators are already oversold. But the longer term, like for example this MACD, you can see it still has some room to run in the correction. Like for example here you can see MACD was negative, and this was actually a good buying opportunity because in an uptrend in security we look for an oversold conditions, and this was an oversold condition. We're not nearly oversold in XLV yet, and I'm very reluctant to buy at this point of the game. So next chart shows Biogen, a big biotechnology company, which reported earnings today on Friday, and apparently, even though it was in my opinion, pretty profitable, the market clearly did not like this report and responded with a just enormous gap down, and throughout the day continued selling. In fact, this is what's called a Maribosu. This is a candlestick which opens, which is entirely red, it opens opening and closing. There is no not even a rebound and not even a bottoming action throughout this. So just throughout the day, non-stop selling took place. So again, important, if you did hold Biogen into earnings, this is the risk you should have been prepared to take. And most likely people had their stops right here, or probably right here, or maybe even at the 200-day moving average, and everybody did the same thing and had their stops here, and then all of a sudden, when everybody wants to sell, there was no price for buyers. Buyers did not step in until a very significant gap down took place. So there was not a single transaction that took place here. In other words, when you're holding to earnings, you take on additional risk for the company. All right, let's look at a little bit more bullish chart. And I'm saying a little bit because it's not a very bullish chart at all. You can see that, as a matter of fact, this is a TLT, Treasury Bond Fund. You can see that there was a death cross even. This is a red line going below the green line, which is a 50 moving average going below the 200-day moving average. So some people consider this a clear bearish sign, and me too. I do consider this a clear bearish sign, but I also look at some other indicators and some other uh, uh, ways to clarify if this is a bullish or bearish security. And at this point, I still thought that this is a bullish security, but just barely so, and not very strongly bullish security. So I still treated this as buying opportunities. So you can see there were 3 buying opportunities in my opinion, and the latest one was right here. After this first breakdown and then rebound, then we had a 2 more retests of this area of 114, 115, and then finally a strong rebound. As a matter of fact, on Thursday we closed above this level from early July, and then on Friday we consolidated the gains here above this breakout level. Now, if this sell-off in the markets, in the stock market continues, most likely money will rotate in bonds, which are considered safe haven assets during the times of uncertainty. And if the stock market is selling off, then bonds is a logical place for money to rotate into. Also, bonds, generally speaking, do well during the summer month, just from historical perspective, while stocks do poorly during the summer months. So that's something, another thing to consider. We may see continued strength in the bonds, especially if the stocks sell off, and the next resistance level is right here, of course, at the 200-day moving average, and if we close above it, that would be a rather bullish sign for bonds. So next, let's look at the dollar index. Turn this off. So last week on Friday we had a breakout above this level from May, and then this week we had what I think is a consolidation and a support test, kind of like a throwback. So a breakout, a throwback. So currently I think we're going to move a little bit sideways and possibly continue higher. This is still a bullish security, so I'm looking for a bullish resolution at this stage of the game. So the dollar if the dollar strength continues, and this will weigh on commodities of all sorts, and gold, of course, is a commodity. So let's look at gold next. Gold had I think one of the worst weeks in many years, and I hit a 5-year low, possibly even a more than 5-year low right here. And actually today it hit another low, but you can see this was an intraday low. So this today's candlestick, I think, is a hammer candlestick. So during the morning, throughout the day, there was a retest of the lows, but then the prices got pushed back up, and in fact the close was near the high of the day, so that's a positive sign. I think it's kind of like a bottom in action in gold, and I think we can easily see a rebound to the 1140 area, which is a broken support first broken support, and possibly even higher to 1170 area, to the 50-day moving average. I don't normally like to play counter trend bounces because this is still a very much a bearish security, and this is kind of like bottom picking. So yeah, you might catch it or you might not catch it. Maybe we'll continue lower again. So it's difficult to say. Uh, there, this is a bearish security, so oversold levels are generally speaking ignored, and overbought levels are shorted. But at this point of the game, this security is very oversold. You can see the MACD is at -20, so it's some serious overselling took place. I think we will rebound once again, as I said, to possibly 1140 or maybe even 1170 area. Depending. And then next a couple of charts I'll show kind of like further my very short-term bullish stance on gold complex. So this is GDX, Gold Miners ETF. You can see it kind of just fell off a cliff here. This was just a huge move right here. I don't remember, it's like 30 or 40% move, I think. So again, all-time low today in GDX, but you can see the similar picture. We during the day we opened low here, retested we actually hit an all-time low, but then closed very close. We closed up for the day, and we closed up 3.3% for the day. So this is, to me, shows that there is some buying interest at these levels. And I think, as with gold, again, it's really oversold. So you can see MACD is in oversold neighborhood. So let me zoom out a little bit and I'll show you what I mean. So, okay, MACD, here we're approaching very oversold level from where last time we had a decent rally right there. So in November low of last year, MACD was around more than -1, and then we rallied pretty hard into close to December. But I think even more importantly, let's look at this bullish percent index, and this shows how many stocks within the index are on a point and figure chart buy signal. You can see right here there were 0 stocks on point and figure buy signal in November, and then afterwards this was kind of like a counterintuitive indicator. There was a rally, and the same thing here. It was a 0, and then we had a pretty powerful rally as well. So we are right now there. We are at 0. There is 0 stocks on the point and figure buy signal. Most likely, as with gold, we will some kind of a rebound rally will take place. We have this gap right here to fill as well, so that will be like a magnet for a rebound. And so some levels to watch is, of course, previous low at 1634, 1697, 1729. So if we rebound, there will be lots of resistance in this area, and that would be the first place for people to take profits once the rebound takes place. Next chart I'll show very quickly GDX, Market Vectors Gold Miners Junior ETF, Junior Miners ETF. So this one actually even stronger. You can see it rallied 5%. It did hit an all-time low here as well. But I think this may be an outside reversal. In other words, this today's candlestick fully engulfs the yesterday's candlestick. So this is kind of bullish engulfing or outside reversal. If we see any more upside on Monday, especially a close above today's high was 1949. So if we close just above 1949, I think this would be a confirmed bullish engulfing, and again we will see prices get pushed up well, at the very least to this level, but possibly even lower to the 50-day moving average. Again, this is a counter trend bounce, so be very careful if should you decide to play it, have a plan of when you want to cut your losses or when to get out, take your profits. Next is oil, light crude oil, West Texas Intermediate. I pointed out this, what I thought was a bear flag, so a steep drop and a kind of like a rise within a channel for several days, and then a breakdown right there, bear flag breakdown, and then continuation lower. So this kind of looks to me like a classic breakdown and continuation lower. I think there is more room to run, and I think once again the target is around $43-44 to this level from this particular breakdown. Again, we're not even that oversold. So you can see MACD here is at what -2, and you can see here it was a lot lower. So there is certainly a potential to run lower for oil, and I still have a position open that we opened. The short signal was right there. Took some profits, but still have a position open here. Just to illustrate, this is a XLE Energy Select Sector SPDR, which contains stocks like Chevron and ExxonMobil. It just hit a 52-week low. So this obviously is tied to oil, and oil stocks are leading the oil itself lower. Pointed out that there was a breakdown in the on-balance volume and energy advanced decline line, energy XLE advanced decline line before the lows were hit right there, and then we continued lower. So market breadth does help you. Advanced decline line, for example, it does help you to see whether or not we have, for example, more room to run to the downside, and vice versa if you're going long. Still a very much bearish security. I would not be looking for a bottom here just yet. And yeah, anyways. And then another one I want to point out, this is Brazil iShares EWZ. We had our short signal actually the same day or very close to when oil started this breakdown in April, late April, and then it consolidated for a few days, for a few weeks, and then just collapsed. Pointed out this, what I thought was a bear wedge, actually a very similar pattern to what we just showed on oil. A steep breakdown, a counter trend wedge or channel consolidation, another breakdown, throwback to the resistance, and another steep sell-off. So it actually is already at multi-year lows right here, and I don't even think it's done yet with selling, because you can see also MACD here, it bottomed out at more than -1, but we're not even at -1 just yet. So I think there's more selling to come for Brazil ETF, and possibly for oil, of course, as well. And then finally, natural gas. I wanted to show. It did go on our short signal on Thursday, and I actually opened a position in DGAZ, DGAZ, which is an inverse ETF tied to the price of gas. So at the very least, I'm expecting a retest of this July low, possibly of this June low, and possibly at these lows as well. I think they're not all-time lows, but I think they're 52-week lows. I don't remember exactly. Yeah, opened on Thursday. We had already a nice gain today, but we'll see. This level, of course, needs to give at 2785. I don't think it just yet. I think it's at the level right now. So if this level gives, this would be a first profit target right there. All right, sorry, that's all I wanted to show for this week. I wanted to show you how to find us on the internet. First, go to MasterChartsTrading.com. We have a blog video section, and we're getting ready to open a trade alert services as well. So please do sign up for our mailing list, and you'll be the first one on the list to receive a promotional pricing once the service is live. If for the charts that are mentioned in this video, please go to public charts page right here, which is located on public chart and social section on our website. If you have any of the social media accounts such as Twitter, Facebook, YouTube, or StockTwits, do find us there as well. Thanks for watching, and have another great trading week. Bye bye.